Hello students, in this video we will discuss a very important concepts of financial accounting, that is accounting concepts or generally accepted accounting principles known as GAAP, GAAP, generally accepted accounting principles. So in examinations directly they may ask directly as a GAAP. So GAAP means generally accepted accounting principles. So the financial statements like income statement, that is a trading account, profit and loss account, and the balance sheet or the position statements are to know the wants and woes of the business, are prepared by using all these concepts of accounting or accounting concepts or generally accepted accounting principles. So here all these are concepts, conventions, principles, customs and other policies that we are using, business using to record the financial transactions in the books of account under the double entry bookkeeping system. So here all these are called as generally accepted accounting principles. Unlike principles in natural sciences, the concept of GAAP, that is generally accepted accounting principles, are framed on the basis of custom, usage, necessity, and it includes the conventions, procedures and accounting practices. Based on all these, we used to apply all these concepts. Unlike natural sciences, here natural science means here we need to adopt the same methodology at any cost to all the businesses. But whereas in case of accounting system, based on the policies and procedures, based on the conventions or the customs, we will apply these concepts while recording the financial transactions in the books of accounts. So instead of using the terms such as concepts, conventions, policies, principles, customs and all these, here we are using the simple word that is as a accounting concept. Simply we are using the accounting concepts, and this concept is consists of all the principles, practices, customs and all other. Simply we are calling all these called as a accounting concept. Simply we are calling generally accepted accounting principles. So here there are the different types of concepts that we have identified under the generally accepted accounting principles for any business while recording the transaction, such as business entity concept, going rate concept, money measurement concept, cost concept, realization concept, accounting period concept, matching concept, dual aspect concept, consistency, full disclosure, materiality and conservatism. So they are the different concepts. Means this includes principles, customs, traditions, procedures, policies, everything. Simply we are calling all these are as accounting concepts. Means while recording the financial transactions in the books of accounts, we have to follow all these concepts. It is mandatory to follow all these concepts while recording the transactions under double entry bookkeeping system. Now let us see one by one how these concepts will work in recording the financial transactions in the books of any account business. That is, the first one is business entity concept. The first one is business entity concept. One of the main assumptions in any accounting process is that every business unit is a separate entity or having a distinct legal entity. It can buy anything, it can sell anything, it can do anything on the name of the business. So any transactions occurred, whether it is for example purchased machinery, machinery for rupees 1000. Purchased machinery rupees 1000. So these purchase transaction is done on the name of the company, but not on the name of owner of the business. Because here, according to the Companies Act 1956 and 2013, the company is an artificial person which can work under the eyes of law. There is no relation between the owner and the company. Owner is also one of the creditor or the investor in the business. Whenever he want to use the any resources in the business, he is treated as a debtor to the business, though he is owner of the business. So here, according to this concept, we need to treat that business is a separate entity. Whatever the transaction the business is doing, so each and every transactions need to be recorded on the name of the business only. Anything happen, and the reports are also prepared. The financial accounting reports also prepared for the financial affairs of the business unit only, but not based on the owners of the names or owners names are the owners of the business. So the second one is the going concern concept. Yes, this is one of the important concept of the accounting. So it is assumed that every business firm continues forever and it has a perpetual in life. So it is not going to be liquidated very near future, or it is not going to be closed in the near future. So because of this assumption, the current market price of the assets become irrelevant. So we cannot close the business within the near future. So according to this concept, the business will continue forever for a long period unless it is diluted. So because of any reason, if the company is dissolved or diluted, okay. But here, according to this concept, business will be continued for a long period. It cannot be closed within the short period. Right? The next one is money measurement concept. In accounting, only such transactions and the events which are the financial nature and character are capable of being measured in terms of money are recorded. If it is not having the financial character or character in money, it cannot be recorded. Only such transactions which are having the character in finance or the money can be recorded in the books of accounts. And the price level changes are normally ignored while preparing the conventional financial statements like a balance sheet and the income statements. So here, whatever the transactions we are conducting, whatever the items we are recorded in the books of should be related to the money measurement. We should be measured in terms of money. That is one of the important concept of this financial accounting. We should record only the money measurement transactions, means should be measured in terms of money. The next one is cost concept. According to this concept, the assets are recorded at the cost at which they are acquired or the purchased. The assets are shown in the balance sheet at original cost less depreciation for using the asset for a given period. For example, here machinery purchased in 2018, the value is 1 lakh. Now we are in 2020, the value may be declined to 60,000 after all the depreciation, but as per the market value, the machinery value is 1 lakh rupees. So we can record only the cost of the machinery, but not based on the value of the asset in the market. So this is one of the important concept of accounting. That is, we can record all the transactions, all the assets on the basis of the cost only, but not on the basis of the market value. The next one is the realization concept. So this is also one of the important concept in accounting concepts, that is, revenue is said to be recognized only when the sales is made in the business, not when the sale proceeds are collected. For example, any customer has given an order for 100 units. Any customer has given an order for 100 units, but the sale transaction has not completed. Just he has given only the order. But the goods not transferred to the customer, and money not realized at the time of preparing the financial statement. Such transactions may not recorded in the books of accounts. As and when the money realized because of this transaction, after completion of the sales transaction, if the money realized, the transaction completed, money transferred to the business, goods transferred to the customer, then only we can record in the books of account as a sales worth of rupees so and so amount. It means that unless realized, the transaction will not record in the books of accounts. That is called realization concept. In other words, the accountant does not usually recognize the revenue unit it is considered to be have been realized. So it cannot be recorded in the books of account unless the money received by the business or money paid by the business to the outsiders. Right? The next concept is accounting period concept. Yes, this is also very important concept because accounts must be prepared for a defined accounting period, such as from January 1st to December 31st, or April 1st to March 31st in the next year. For example, for the first case, January 1st to December 31st, here January 1st 2020 to December 31st 2020 is the accounting period. This is accounting period. But whereas in case of second one, April 1st 2020 to March 31st 2021 is a accounting period. So the business which has been registered by the registrar according to the Companies Acts follow this accounting period, that is April 1st 2020 to the March 31st in the next year, or January 1st 2020 to December 31st 2020. Means accounting period should consist of 12 months. The starting date and the ending date of the accounting period should have 12 months. Then only we can say that it is a accounting period. So accounting statements will prepared for the year, that is consist of 12 months only. And sometimes in like rural areas or the villages or in the past, in the olden days, here Diwali to Diwali, Sankranti to Sankranti, or one festival to the same festival in the next year. So but here that consists of 12 months. The same festival will not come twice and thrice in the same year, right? So here sometimes in olden days they have followed this kind of concept to set that accounting year. But now as per the Companies Act, here April 1st 2020 to the March 31st 2021, or April 1st in the current year to March 31st in the next year is an accounting period, or January 1st to December 31st in the same year is an accounting period. This must be followed by every business in order to say that it is as accounting period, in order to prepare the financial statements according to the concepts of accounting. The next one is matching concept. Yes, here Matching concept states that the expenses of a given period must be related to the revenues of the given period, particular period only. So the revenues and expenses must be matched in that particular period. The revenues earned for the period must be determined first, and then the expenses are to be matched to the revenues earned during that given period in order to ascertain whether there is a profits or losses. So the expenses is incurred in 2020, the revenues realized in 2021. It is not possible to match. So the revenues and expenses realized in the same academic year, then only possible to match. So this matching concept is also one of the important concept in the accounting concepts. The next one is dual aspect concept. The next one is the dual aspect concept. According to the double entry bookkeeping system and as per the dual aspect concept, the accounting equation is assets equal to equity. It is always holds good when there is a assets equal to equity. We can say that the financial position of the company is good. It is always good. Every transaction will affect the accounting equation. So according to the dual aspect, assets equal to the equity. This should be satisfied. Then consistency. Consistency means here using the same method for a long period in the business in order to ascertain in the different areas is known as consistency concept. Or there are many accounting policies such as method of maintaining accounting period or valuation of the stock or valuation of the depreciation or methods of depreciation and others. So here though there may be different methods or there may be different policies are there in the business, but we must use or follow the same method, same valuation method, and the same thing we need to use for the long period in order to compare the performance of the same from one period to another period. For example, in case of comparing the assets of the business. So if you are using straight line method in 1 year and in another year you are using double declining method or the declining method. So there is a change in method of depreciation, method of calculating the depreciation on assets. Hence there is a difference in the valuation of assets at the end of every accounting period. In such cases, it is not possible to compare the value of the assets in these two periods. For example, here in 2018, you are using straight line method of depreciation in order to calculate or ascertain the net value of the asset. In the year 2019, you are using declining method of depreciation. In 2020, you may follow double declining method of depreciation. So in this case, it is not possible to compare the value of the assets at the end of accounting period. If you want to compare the performance of the assets for the year 2018 and 2019 to 2020, you must have to follow the same depreciation method for every accounting period. Otherwise, that is not possible, or it is not possible to compare the value of the asset. So follow such accounting policies in order to compare the value of the assets, value of the business performance, or the value of the business from one accounting period to another accounting period. So consistency means follow the same methods of depreciation, methods of valuation stock, same methods for a long period in order to compare the performance of the business from one period to another period. The next one is full disclosure. According to this concept, it is essential for all the transactions that take place in the business need to be disclosed in full. irrespective of their volume of irrespective of their volume, irrespective of their nature, irrespective of their business, or irrespective of any factor, here the business must be disclosed all the accounting information in front of all the stakeholders in the market. So this is one of the important concept. So this may be useful for the different stakeholders in terms of owners, in terms of managers, employees, creditors, investors, governments, or any stakeholder in taking the decisions related to the business. So disclosing the information related to the income statements and the position statements like balance sheet is also very important in the business. It is also one of the important concept of the accounting. The next one is materiality. Materiality. Materiality is an exception to full disclosure principle. So materiality principle states that if an accounting detail is not very important or material in nature, it can be dropped or ignored. It means that this will not affect more on the economic position of the company or the business. In such cases, that kind of transaction may be dropped in recording the books of accounts. So the essence, the importance of the materiality principle is to record only such items which have a significant effect on the business of the enterprise. If there is no significant effect on the economic position of the business, you may drop. That is against the full disclosure. So sometimes it is required to drop some transactions which are not affecting more on the economic position of the enterprises, which reduces the work or the burden of an accountant in the business. So need not to record each and every transactions which is not effectively, significantly affecting on the economic position. So that is also one of the concept of accounting, that is materiality. The last one is conservatism. Yes, conservatism. While recording the accounts, you should not anticipate income and should provide for all the possible losses. You should not anticipate the income of the business, but also provide for all the possible losses. There could be many alternative values of an asset. An accountant, according to this concept, conservatism, should choose the method that leads to the lesser value. While comparing these methods, the method which leads to reduce the value of the asset or the use to provide the lesser value of the asset will adopt in order to prepare the account statements or the balance sheets. So according to this conservatism, you should not anticipate the income of the business, but also should provide for all the possible losses of the business. Then only it can show the accurate the financial position of the business. If we are showing the more and more values of the business, automatically that will not show the accurate the financial position of the business. So this is also one of the important concept that the accountant should follow while preparing the income statement as well the balance sheet of the business. So these are the different concepts of accounting. Instead of using the different words, as I said, these are the principles, conventions, concepts, customs, traditions, policies. All these are all called as concepts of accounting. Simply we are calling these as generally accepted accounting principles. In examinations, this is a compulsory question, that is explain the concepts of accounting, or explain the conventions of accounting, or explain the policies of accounting, or explain the customs of accounting, or simply gap, generally accepted accounting principle. Simply they will give as explain gap, that's all. Even it will not be explained as generally accepted accounting principle. Simply they will give explain gap. So these are the different concepts of account which are used by accountant while recording the business transactions in the books of accounts in order to ascertain the accurate the results or the performance of the business. Now we will see one of the most important bookkeeping system in any business, that is double entry bookkeeping system. In fact, there are two types of bookkeeping systems, that is such as single entry bookkeeping system and double entry bookkeeping system. Double entry bookkeeping system. There are two types of recording of transactions in the businesses. Two systems, that is single entry bookkeeping system and the double entry bookkeeping system. So here in double entry system of accounting, bookkeeping means that every business transactions will involve two accounts, that is debit and credit. Debit and credit. Whereas the single entry system, it is unscientific way of maintaining accounts. Small business units in unorganized sector can maintain these books of accounts under single entry system of bookkeeping. Here, like entrepreneurs may use this single entry bookkeeping system where they are investing small in the capital, small in investment, small in operations, where they can use the single entry bookkeeping system. But where the double entry bookkeeping system is a scientific way of recording the transactions based on the fact that for every debit there is a corresponding credit. For every debit there is a corresponding credit is the main importance of double entry bookkeeping system. So it will give the preference for both the accounts, debit account as well as the credit account. Under double entry accounting system, double entry bookkeeping system, both debit and credit aspects of transactions are being recorded in the business books. Example, when a company borrows money from its bank, the company's cash account will increase and its liability account loans payable will increase. So both the transactions will be recorded in the books of accounts according to double entry bookkeeping system. That is, what is the liability has been increasing, what is the liability is increasing, and what are the corresponding cash is going out or coming in. So everything will be recorded according to this double entry bookkeeping system. So recording both the debit and credit aspects of transactions is called as a double entry bookkeeping system. See, we need to remember that this double entry bookkeeping system recording both the transactions are the aspects of the transaction, the both debit and credit. Now let us see what are the advantages of double entry bookkeeping system. What are the advantages of double entry bookkeeping system? Here they are the some of the advantages of double entry bookkeeping system, such as information about every account which we are preparing. It helps to know the receivables and the payables in the business, and it helps to complete the accounting process in arithmetical accuracy, and it helps to locate the errors in accounts or the statements, and helps to ascertain the profits or loss by preparing a income statement, and helps to know the financial position of the business by preparing the balance sheet, that is assets and liabilities statement, and also used to monitor and auditing made easier. So they are the different are some of the advantages of double entry bookkeeping system. Now let us see one by one. The first one is information about every account. Under double entry bookkeeping system, both the aspects of the transactions are being recorded in the books of accounts. Hence, the information about every account is available in the books of accounts as well. All are to be found in the ledgers under the double entry system. No transaction can be missed. Once you have recorded means for each and every transactions, both debit and credit aspects must be recorded if you are following the double entry bookkeeping system. So information about every account is available in the books of accounts, as well as the accounts are to be found in the ledgers under the double entry bookkeeping system. Therefore, here each and every account in the ledger book will show arithmetical accuracy of the transactions. The second one is it helps to know the receivables and the payables. Yes, the double entry bookkeeping system will helps to know how much is owed to the creditors and how much is due from the debtors. Also, it focuses on the bills payables and receivables. How much owes to the outsiders and how much is due from the debtors, means the current assets as well the current liabilities. This double entry bookkeeping system also reveal or discloses that owns as well as woes of the business, that is assets as well as the liabilities of the business, both the current assets, current liabilities, fixed assets and the long-term liabilities also. In this way, the double entry accounting system can help to know the receivables and payables at a specified period in a particular year. The next one is arithmetical accuracy. Yes, if you are using the double entry bookkeeping system in recording all the transactions in the books of accounts for a business, it will show arithmetical accuracy. The arithmetical accuracy can be ascertained by preparing the statements of debit and credits called the trial balance. And this is possible because both debit aspects and the credit aspects of every transactions are recorded in the books of accounts. So at the end while preparing the trial balance, both the debit balance and the credit balance must be tallied. Here these two columns are tallying means we are using the double entry bookkeeping system. If you are not perfectly or properly implementing in practice while recording the transactions in the business, both debit and credit transactions, the trial balance may not be tallied. This is not tallying means you are not implementing this double entry bookkeeping system in proper manner. So here, if you are implementing the double entry bookkeeping system in proper manner, properly, automatically you will get arithmetical accuracy, means the perfect accounting information is available in the books of accounts by using this double entry bookkeeping system, and also helps to locate the errors, as this double entry bookkeeping systems to locate the errors made occurred in the books of accounts. This will helps to locate the errors. Here trial balance can reveal the errors that creep in accounts while recording the business information. For example, here there is a transactions conducted with Ram, here 15,000 rupees. For example, if you have conducted the transaction with the Ram 15,000, as let us say he is a creditor who has provided the assistance to the business in terms of raw material. So instead of creating the ROM account, if you debited with 15,000 the ROM account, automatically it will be found in the trial balance. It will be found in trial balance, because here instead of creating this account, we are debiting his account worth of rupees 15,000. We have done some error or the mistake in recording the transaction. So these kind of errors may find in the trial balance at the time of preparing the trial balance. And also while preparing the trial balance, if you find that the error location also can be found by using the double entry bookkeeping system. That is, instead of creating the RAM account, we have debited worth of rupees 15,000 to RAM account. Such errors also detect errors also locate by using the double entry bookkeeping system. The next one is helps to ascertain the profit or losses. Yes, this profit and loss accounts can be prepared without much difficulty under the double entry accounting system, unlike single entry system. So we need not to face more difficulties to prepare the profit and loss account under double entry system. There is no difficult actually, because here everything is recording as per the double entry accounting system, that is debit and credits, as well as we have prepared clearly the ledger accounts, the ledger book, preparing ledger book. In book we have prepared different accounts accordingly. By using the closing balances of the trial balance, we are preparing the trial balance where the trial balance has been tallied, and if you have tallied the trial balance, automatically the same information will be posted to or transferred to the final accounts statements and accounts. So here each and every stage, journal, preparation of the journal, preparation of the ledger book, preparation of the trial balance, and also the final accounts, the double entry bookkeeping system is monitoring very clearly how these transaction has been recording in the books of accounts. If any error made, immediately the double entry bookkeeping system will detect or find the error in order to solve the problem. So that is there in case of double entry bookkeeping system. This is one of the advantage. And as we are using the double entry bookkeeping system, preparing the income statement or trading account and profit and loss account are very easy when compared to the single entry bookkeeping system. The next one is helps to know the financial position of the business. Yes, here it is not only helping in preparing the profit and loss account or the trading account, it also helps to prepare the positions statement, that is balance sheet of the business, where we can find all the assets and the liabilities of the business. So it is also helps in preparing the balance sheet that reveals the financial position of the business as on a particular date. The next one is monitoring and auditing made easier. Double entry bookkeeping system made easy that monitoring and auditing of these books of accounts of the business. So with the double entry bookkeeping system, the scope for fraud and theft and misappropriations is very less. So provided proper internal auditing system is in place. Because of these advantages, double entry system is very much popular all over the world. So many of the countries are using this double entry bookkeeping system, and this double entry bookkeeping system is a universally accepted system. Of course, single entry system is also using, but mostly and most of the companies, MNCs, are using the double entry bookkeeping system in order to record the financial transactions in their books of accounts, in order to know the financial position of the company at the end of accounting period. So these are the advantages of double entry bookkeeping system.